biggest programs, and most of you have heard about it by now, is the 2-1 buy down. And that's a strategy that you can use with your seller to incentivize the buyers to come forward. And what that means is that when we talk about a buy down, buying down your interest rate, which is very, very important right now since the interest rates are so high, everyone is trying to figure out how to make that monthly mortgage payment more affordable. And how do we do that? So what lenders have come up with is they've come up with something called a 2-1 buy down. That means it's a temporary buy down. Traditionally, when you buy down an interest rate, you are doing what is called a permanent buy down. Meaning you will go to your lender and they will say, okay, great, the interest rates are 7%, but if you want 6.5%, you can pay 2 points on that loan. And what's a point? It's a percentage of the loan amount, okay? So you can pay 2 points on that loan and that will get you 6.5%. That's a permanent buy down. It's good for the full 30 years. A temporary buy down will be a more extreme dip, but it is only for a limited amount of time. It's not for the entire 30 years of the loan. So what a 2-1 buy down does is your seller will pay that 2%, and instead of it dropping your interest rate from 7% to 6.5% for 30 years, it will drop your rate from 7% to 5% in the first year, 6% into the second year, and that third year you will be back at 7%. So it is a temporary buy down that is stepped up until that third year. But what that does for the buyer is it gives them a mortgage payment that is substantially less than what they would have if they took the current market rate at 7%. And if you guys are interested in that, please see us afterwards. We'll talk a little bit more about that, but that is a huge seller strategy that you can be using with your sellers now to not only draw buyers towards you, but also to really help your seller to offload that property. And 2% on a $700,000 loan amount would be $14,000. But a price reduction of $30,000 or $50,000 is going to hurt the seller much more in the pocketbook. So it's another strategy that you can use in order to help those sellers if you're in a compromised selling position.